There are many reasons to refinance your existing mortgage, and even though interest rates are not as low as they may have been during the pandemic, they are still so low compared to where they were before the pandemic. That means it could still be a good time for you to refinance and find significant savings. Hi, this is Parker Couch with Homestar Financial, and in this video, I'm going to share why now might be an ideal time for many to refinance and know if refinance is right for you. Mortgage rates are continuously in flux from week to week, and unexpected drops or increases, they sometimes happen. Now, the general trend points to rising interest rates in the future. Despite this, interest rates are still below pre-pandemic levels, so those looking to finance may still be able to get a really good deal. What's refinancing? Great question. Well, refinancing a mortgage is when you take out a new loan to replace your existing loan. You'll keep your current house, but you'll have a new mortgage with potentially different and better terms. There are so many reasons to refinance, including, number one, getting a lower interest rate, 2, moving from an adjustable rate to a fixed rate, 3, eliminating PMI or private mortgage insurance, 4, shortening the term of your mortgage so you can pay it off sooner, 5, increasing the term of your mortgage to lower your monthly payment. But how does refinancing actually work? Well, when you refinance your mortgage, you're getting a new loan to replace that existing loan. You'll be required to go through many of the same steps and qualifications that you did when you purchased your home, such as completing an application, submitting income verification, underwriting, home appraisal, and closing. There are requirements that you'll need to meet, such as credit score, debt-to-income ratio, and employment history. And when you refinance, you can choose to go with your original lender, or you can find a new one. You'll also need to have enough equity in your home, typically at least 20%, to qualify for a refinance. Keep in mind that you'll also need to pay closing costs and fees, which can be anywhere between 3 to 6% of the loan's value. So now the next question is, what is an actual good mortgage refinance rate? There's no set standard for a good rate. Generally a refinance rate should be at least 1% lower than your current mortgage rate for refinancing that 100% makes sense. We'll need to crunch the numbers to truly understand whether a refinance makes sense for you. And if you have other debt like credit cards to pay off, it may make sense to actually refinance and pay off your outstanding debt to lower your overall monthly payments and free up cash each month. If you decide to refinance, keep in mind that even though average interest rates are low right now, the specific rates you may get will depend on personal factors like your credit score and debt-to-income ratio. If a refinance is part of your financial plans, now is an ideal time to do it. Here are 2 reasons why you should refinance right now. First reason is we have historically low rates. Today's refinance rates are no longer at the rock bottom level of the early months of the pandemic, but they can still be really good compared to pre-pandemic times. However, experts are predicting that interest rates will rise, so the window of opportunity might be closing very soon. The sooner you lock in the rate, the more likely you are to save. And the second reason is that the outlook of an economic recovery is on the horizon. In 2020, the pandemic-induced recession and the resulting economic uncertainty caused some homeowners to hold off refinancing. And because the refinancing process can take several months to complete, those worried about job stability may have felt it best to wait until things were a little bit more stable. Economic recovery, though, is now on the horizon, and those who might not have been in a position to refinance last year may now have the chance. Ultimately, the best time to refinance is the time that works best for your goals and your financial picture. And if you can get a lower interest rate and afford the closing costs, a refinance could help you save on your monthly payment. The best advice is to meet with a licensed loan originator like myself to find out your options. We have the opportunity of taking advantage of these historically low interest rates, and it's worth your time to at least call and find out what your options are. The process is not as difficult as you think, and it could significantly lower your monthly payments or save you a ton of money in the long run. Thanks so much for watching. If there's anything that I can do to help, please do not hesitate to call or text me. This is Parker Couch with Homestar Financial. You can call or text me at area code 770-540-4936, or you can email me at parker.couch@homestarfc.com. Thanks so much for watching.